Hello, welcome to Al Stock Trades. So in this video, we're going to go ahead and do a mega technical analysis by looking at pretty much Clover Health's historic movement and do some technical analysis and basically try to see if we're seeing any breakage and change of pattern. So just very quickly, normally I don't like to delve over fundamentals or economy when it comes to technicals, but to answer your question, will it go up next week? I don't have a crystal ball. No one knows when a stock is going to go up. Yes, we have indicators. Yes, we have type of golden sweeps and different types of things that essentially will help us give us an edge over 90% of traders, which 90% of traders end up losing money. But overall, we don't know when it's going to go up. All we know is we can calculate the intrinsic value, understand when a stock is over or undervalued, and essentially, utilize our frontal cephalized lobes to essentially make a prognosis on whether the stock will go up in the long term, such as 5 to 10 years from now. So in this video, we're going to go ahead and we're going to pull up not intrinsic value. We're going to go ahead and open up the help menu here. And we're going to go in. And once we open up this help menu, we're going to open up the charts here, as you can see. And we're going to go ahead and open up CLOV. And then once we open up CLOV, we're going to look at the daily. We're going to look at the daily. And then after the daily, I'm just going to pick an arbitrary large number. I'm going to pick 700 days. We're going to go back 700 days, and we're going to use the AI to pretty much take all the information, grab the Fibonacci sequence retracements, graph the support and resistant lines, graph all the data necessary for us to do a mega technical analysis. And we're going to go ahead and we're going to click the interactive chart here. Once we click the interactive chart, we're going to basically, this is all directly from our stock terminal here, okay? Then we're going to go ahead and look at some patterns. Now, let me just go ahead and answer some questions. Is the Discord access free or paid? So a lot of this information, if you were to get it by yourself, it would cost you anywhere between $1,000 to $2,000 a month. So unfortunately, we do have to charge, but luckily it's not a lot. It's just $19.99. It's literally less than $20, literally less than, what is it? $19.99 divided by 30, less than 64 cents a day, literally 64 cents a day. You have access to everything that we offer on our stock terminal. And if you want more, we have the mastering. And we also have a 7-day free trial. So if people are interested, just to answer your question here. So we have a 7-day free trial. You like it, keep it. You don't, no worries. Okay. So then it says here, I'm just going to answer a couple questions. We're going to go back to the technicals here. In my opinion, profitability brings it back to SPAC valuations, which is about 7.5 or something like that. Okay, good. And I love to hear other people's thoughts. I think SPAC was around like $10 or 10, something around there. But yeah, even then, SPAC evaluation 7.5. I mean, come on, isn't that? I mean, that's still great than where it's at now, right? When we get 100 plus, joking apart, hope one day it'll go up higher. Well, that's the thing. We'll talk about the future prospects, especially from that SEC video I made recently. All right. So overall, we'll start here. Okay. We'll start here. So I'm going to go ahead and turn up my mouse here. And we're going to go one by one. Okay. So you see these dashed lines here? These dashed lines go all the way to the right. And it graphs you the support and resistance. Technically, these are all resistance because anytime you break a past support line, it turns into resistance. So now, Clover, obviously, from a technical analysis standpoint, has a long journey ahead of itself, okay? But you can see some journeys are easier than others. As you can see, once, for example, it passes $15, the journey towards 28 will obviously be a lot faster in comparison to because of the squeeze here, okay? And we'll talk about that once we get there in the future, okay? So overall, these are your support and resistance lines. This down here is your Fibonacci sequence retracement. This blue line here that you see, this kind of, purplish blue line, the same color as here, is your simple moving average. Obviously, the green is stock price going up. Red is essentially stock price going down, and the wicks represent the intraday price movements here, okay? So again, this is just kind of pure TA here we're just going over, And the biggest thing on why I like to use an AI implemented um, graph here is that a lot of folks, unfortunately, when they draw their support and resistance lines, they're very inconsistent. And that's what happens. That's why 90% of day traders lose money, because they're inconsistent with what they do. We are flawed human beings. And that's just the sad part about it. And that's the reality that you have to swallow. So the best way to fix that is just make AI do the things that are essentially kind of grunt work, which is drawing the support and resistance, drawing the Fibonacci sequence retracements. And once we go ahead and have all this, you're going to go ahead and outperform someone who takes the time to go ahead and draw these resistance lines, when you could just pull up any stock you want, especially top short squeeze stocks, gamma squeeze stocks, or whatever stocks you want, and you'll have an edge over someone drawing lines and all this other crap, right? I'm not saying that lines are bad, but you can add to this. You can add a trending down line and trending up line, and you can add these types of things to help you. That's why I like the Bollinger Bands. It kind of tells you if you're in a negative channel or positive channel. Now, the biggest crux of this discussion will be centered on, stage analysis, okay? So what is stage analysis? There are approximately 4 stages when it comes to technical analysis, just to break it down to essentially simple way, teaching it to a 5th grader. You have stocks going up, you have stocks changing momentum, and you have stocks dropping, and you have stocks consolidation, okay? You have a consolidation period. So the cool part about it is, this stage 4 is quite dangerous. A lot of traders that are newbies, they tend to lose a lot of money in stage 4. They tend to think that every increase is about to bring us to the top. I mean, what do you expect if you've had so much time of seeing this? A proper trader will analyze when a market is essentially going down, right? When a stock is essentially going below its 30-week MA or its 200-day moving average, or a simple moving average that's prognostic for the daily charts, as what you can see basically in this figure chart here. So the goal here is, the question is, well, when are we going to see momentum? When are we going to see this? Well, we're going to see this essentially where you would have essentially a cross. So you've had a cross of the 200-day failed, cross of the 200-day failed. So obviously this is just another way of consolidation here, right? This is stage 1. Stage 1 is, started, failed, consolidation. However, what is like essentially breakage of pattern? Well, you cross, you support. That's 1. Some people use 1. I would say naive investors that are a little bit more advanced, they use 1. But real investors that have been in the market for quite some time, and real day traders, what they like to do is they like to use the second one. That second one really gives it shows us that, this is a real movement. This is changing, and the probability of success, if you were to map it out between every movement that you can possibly make in the history of the stock market, the odds are you're in your favor. Now, the beautiful part about this is this is just technical analysis. And if you take technicals and you actually mix it with fundamentals, that even gives you a bigger edge, because a lot of day traders that are in the 90% that lose money, you think they understand what a balance sheet is, or statement of cash flows, or intrinsic value calculation, or discounted cash flow statement? No, of course not. And on top of that, that gives you another market edge with your AI edge, with your hedge fund data hedge, with your smart money, dumb money hedge, and your equity hedging index edge. You obviously get to a point where you have so many edges over the normal investor that just has a Robinhood app that you're going to outperform them, right? Which is why we've been working hard to essentially we've been working our asses off, excuse my language there, to essentially build a platform to get ready for this bull market, right? So I mentioned something important, and it's in our hedge fund data set here. If we look at the equity hedging index, and if we look at the past, we can see that anytime we're across the screen line, usually, here's the coronavirus pandemic in 2020, here's when the stock market fell, we saw a peak, and that was a great time to buy. Well, guess what? We're seeing a peak here. The question is, has it done peaking? Because we know that once it peaks, it's a great time to buy. So sadly, though, we are seeing it go back up a little bit. but we need to use more data. So that's what I'm saying. There's a lot of data. Then you got to look at smart money, dumb money. What is smart money doing? Sadly, whenever stocks go down, dumb money in red sells, but smart money goes ahead and buys. So you got to use all these data sets. It's like basically a doctor taking different types of lab values, the sodium level, the potassium level, the BUN, the creatinine, and each basically tells you what's going on in the body. ALT, AST helps you with the liver, right? BUN, creatinine helps you with the kidneys. The sodium level and potassium helps you with how the body's regulating its electrolytes. So that's exactly what you're doing here. You're just basically doing it for something else, okay? So now that we went ahead and introduced this and basically why we're doing this and why this is important, because consistency and discipline will always give you favorable results, because then someone who's inconsistent and non-disciplined. Let's continue. So as you can see, let's zoom in on here, because this is an interactive chart that you can pull directly from our stock terminal. You can see that every time the simple moving average below, it's not favorable for the market. It's not favorable at all. Okay. But we got a cross. And let me just go ahead and do this here. We got a cross and it failed. Then we got a cross here and then a failure. Then went across and then a support. And now you know at around $8.50, it's a great time to be. Then you had the squeeze, and then you would use something else called the exponential moving average, and you would move the simple moving average closer to the closer to the price action, which we'll teach on the mastering here. But most importantly, if you zoom in on here, you can see you have these Bollinger Bands. It's almost like you have the upper VWAP, the middle VWAP, and the lower VWAP. And once this crossed the lower VWAP, you knew that you were in the bound of trouble, okay? Then you had the colossal demise of the short squeeze, okay? Let's kind of move it here. And let's zoom out a little bit. And then you had, again, this is the simple moving average. Then you had a cross on the negative downside back to, going into stage 4 again. So you had your stage 4. And you had your breakage, no support, crash. Breakage, no support, crash. Okay, let's move. Breakage, no support, crash. And then we had some time under the simple moving average. We got a bump here. We got some support here. We got another support. People got excited. This was great. But then we got a crash. Okay. And I need you to follow along with the RSI here. Look at the RSI. RSI was near oversold. Technical in the MACD, if you look at the MACD started to cross. And then we started to fall back down. Okay. Let's zoom back in. Again, now we're just oscillating with literally low volume. Just look at the volume here. No volume relatively in comparison to the volume that we saw here. Look at the volume here. So you got to use all these indicators to give you a picture. Okay. Okay. So literally nothing. Right. And then now we're zooming in on here. And we're seeing not a lot of changes. Okay. We're really zooming in on here. So now we can go in and really go in and try to see this line here. So now, and again, we are heavily oversold, right? Again, this is RSI, undervalued, overvalued based on the technical indicators. Now the goal is essentially trying to see, this is the blue line here. Let me show you. This here is the blue line. And we're trying to see if we're going to break this. Everyone's watching this right now. Everyone's watching this. See this little line right there? Let me just zoom in so there's no confusion here, okay? Okay. Here is the simple moving average, this line. This line here is the simple moving average. Here's the upper Bollinger Band, and here's the lower, okay? We're wanting to see if we're going to break this. Obviously, there's better ways of doing this. You can look at the 5-minute chart, the 1-minute chart, which we've done, and actually we offered it to our just a very simplified sample version to the Reddit page if you're interested. Okay. And now the question is, When are we going to start breaking this? And that's when the technicals meets the fundamentals. And we don't want to put it all in one video because that's going to be very complicated. But overall, I would say once we get out of no man's land here, which is honestly a great opportunity, we're going to shoot up. This is going to be one of the first signals. You're going to see a bunch of news articles come out. Clover, 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 Clover. Then analysts are going to increase their price targets. Then you're going to get another jump. You see how the distance between these lines and these lines are different? Then you're going to get another jump. I mean, I've seen this rodeo play out multiple times, okay? Then you're going to get a bunch of news articles. They're going to make these consistent jumps, okay? And then what's going to end up happening is you got to be careful because sometimes, depending on how long this will take, Clover may show that they're profitable, everything's good. They might do a share dilution. Be careful, okay? So, you got to follow that. And sometimes it depends how the market reacts. Because it's basically overly bearish now, maybe it may not react because it reacted pre-anticipatory of that. So the market can trick you like that, okay? But what's going to end up happening is once Clover starts going up, many individuals that are unfortunately have not watched this channel are going to think that this is a short squeeze. Once this basically fills in this particular large gap of literally no resistance, many folks are going to believe, this is, obviously some squeeze happening, but we all know that we've been talking about this and analyzing this for about a year here. And we're going to do, we're going to do really well. And if you look at here, the volume, you can see the volume start to tick up, right? The volume, right? Before we've had low volumes. So, now we're starting to see the volume tick up. All right. So I hope that was helpful. Again, this is all part of our stock terminal. You can get access to it at alstocktrades.com. There'll be a link down below. There is a 7-day free trial for anyone that's interested. You can look up any stock you want. Here are the terminals, and there are terminals scattered around. There's obviously groups of people where you can talk. And there's other things here too, right? You can look at, these are auto populated. So they send to you every time the market opens. So there's a lot of support here. Okay. All right, let's go ahead and go through questions and go from there. Feels like Clove is going to pop next week after fighting the $1 closing. Thoughts on the... Yeah, so I just gave my thoughts on the technicals. What does that acquisition of non-open market means? It looks like Andrew Toy got 9 million shares of Clover January 1st. What does that mean? So we'll talk about that more on the fundamental side of things. But I want you to go ahead and I want you to research this on Google and then comment down what you think. And I want to challenge you on that matter. Okay. Good. Beautiful. And actually, by the way, yes, if you can, please give this video some likes as it will help the due diligence of the channel and help expose it to more people. Okay. Hi, Al. Do you think that Clover will ever give away dividends for the stock? So dividends, normally you would not want to give money until 10, 15 years until the company matures. Right now they're growing. They're only in 2 states or 2, 3, whatever. I mean, there's like less than 10 states, right? Or something like that. So you don't want a company to give out dividends right now. You want them to expand. So you want to use every dollar that they have for their mission. So I wouldn't, if you want dividends, I would say oil stocks are good, natural gas. You look at those sectors, look up dividend-paying stocks, and you can search dividend-paying stocks on their platform as well. So that's pretty much it right there. If you like this video, please consider subscribing, liking, commenting, and sharing, and also visit our stock terminal. We also have our own stock terminal domain, stockterminal.io, because we are now turning into a data center. So if you were to go to, let's say, Fintel, or just say Fintel, you would see that Fintel is a .io. But if you go to Stock Terminal, we also have another website called stockterminal.io, and it takes you directly to our stock terminal. Or you can just go to Al Stock Trades. But yeah, that's all I have for you guys, and I'll see you on the next one.